Well, hello, everybody. Thanks for joining our first webinar. We have the pleasure of having Ryan Saylor here from Beyond Pricing. I just want to do a brief introduction here. Ryan started his time with Beyond as a revenue manager. He worked directly with short-term rental property owners to help them advance and develop revenue management tools and strategies. Matter of fact, a little fun fact, Ryan was one of my first revenue managers with Beyond back in the day, right?
Oh yeah,
Yeah.
way back when now.
Although he is now a director of product marketing, he still spends time helping property managers and owners reach their revenue goals. Prior to joining Beyond, Ryan spent time in hotel revenue management, working with independent and branded hotels, developing strategies related to pricing, distribution, and digital marketing. Welcome, Ryan. Thanks for doing this today.
Thank you, thank you. Thanks for having me. And lovely intro. I have nothing else to say. But yeah, I've been with Beyond for a while now. It'll be 6 years in a little bit, and excited to chat through a couple things today. But I typically like to focus on just what we're seeing in the market for short-term rentals around the world. We'll be focusing mostly on the U.S. here, so we'll do a couple deep dives. But yeah, I typically like to look at, what we're seeing for, really the rest of the year at this point and what we're recommending to people depending on what's happening in their markets. I find that's most impactful. And, Beyond got started over a decade ago. Since then, we've built up this mountain of data that powers all of our products and services. And so we want to share that with everybody, just to see what's kind of going on and get a pulse for what's happening in these markets around the world. So to kick things off, we'll really kick off with national trends and take a look at the broader U.S. market, what's happening, what we're seeing compared to the past couple of years. Then we'll dig into a couple of regional examples. We'll take a quick look at search data and what we're seeing there for just where guests are looking to stay throughout the year right now. And then I definitely want to leave a good amount of time for some Q&A, whether that's about different markets, anything you're seeing in your market, issues you're having as a host or property manager, anything about Beyond, revenue management, hotels even, anything on your mind. So throughout kind of my session here, feel free to pepper things into chat, save them for the end, whatever works. If I see stuff, I'll try to get to anything while I'm chatting. Otherwise, happy to chat through towards the end as well. As far as sort of like what's the latest and what we're hearing from property managers, at Beyond, we've got our core team of customer experience managers that actually work through and work with hosts and property managers around the world. So I typically try to chat with them every couple weeks and take a look at what's happening, what we're seeing in markets, what are the biggest pain points we're feeling right now across the professional industry. The big one for the past couple of years now at this point has been just supply swings. Markets that drew a lot of investment post-COVID, post-2020, now seeing some of that demand shift back. Overall, we're relying less and less on some of the data we looked at over the past 4, 5, 6, 7 years, just because supply has had a huge change over the past couple of years. And this is still really prominent in quite a few markets. Most of you are probably aware of what's happening in your market, but always good to call out that we're still seeing quite a few differences in supply year over year, whether that's more short-term rental properties coming into your market, less with people maybe moving to long-term or selling off a property, but still having a pretty big impact on just in general what we're seeing for supply. Annie, to answer your question, yes, happy to share all of this afterwards. There'll be a ton of data, so we'll share it out as a PDF. I'll leave that to Heidi and Matt to share with everybody, but definitely can share this afterwards. Ownerships is another big one. I would say this has been a big topic for the past 2 years, but has really always been an evergreen topic for professional property manager. Competition is heating up with so many crazy years over the past half of a decade now. There's been a lot of different expectations coming from owners. So one thing we've been helping property managers do is understand their relationship with owners, help them fold in their revenue management strategy as a way to defend their performance as a property manager, and then also call out and help them showcase that they are, using data and using revenue management strategies to put their owners at the top of the market. But definitely a consistent theme that we hear from property managers on the owner relationship, owner management side of things. RM evolution is kind of the one that I'm most excited about. Certainly, over the past year, we've heard a lot and seen a lot of tools emerge using artificial intelligence on the revenue management side of things. But even outside of that, we've seen new data, new tools, techniques, strategies that I think are really going to continue to define really the next era of revenue management for the industry. We used to always talk about just dynamic pricing. Dynamic pricing was all there is to revenue management 10 years ago. And now we know there's so much more that impacts ultimately a guest's likelihood to book one of your properties outside of just the nightly price. Photos, I think we've beaten that horse for a couple of years now. Distribution is a big one. Marketing, how you're using different types of marketing tactics and new data really can influence ultimately how you perform as a revenue manager. So I'm really excited to kind of share some of that data today and talk through some techniques and strategies that we're seeing some of the top revenue managers use today. All right, so starting high level, US national trends. I like to start here just to kind of gut check where we are. We're in a really good point of the year to understand some of the high level themes. Typically, we see the majority of bookings made for a stay year, so 2025. We see the majority of those come in during Q1, and the vast majority come in over the first like 5 to 6 weeks of the year. So we've already really had sort of our big mound of bookings come in for the year. We'll still see more throughout the year, obviously, but we've got a good baseline for already what's on the books in the US. Here's a look at occupancy. So the next three charts, we're going to look at occupancy, average daily rate, and revenue per available night. I'll walk through each one, but what we're going to be comparing is as of today, where January finished. So January as a month already gone, so we can kind of see where things finished for the US. And then for February, it's sort of a midpoint check-in on the first half of the month where things finished, and then moving forward, everything is pace data. So everything February onward for this chart is where was occupancy on this same day in 2024 and 2023. So a really good apples to apples comparison of just how things are trending. So on the occupancy front, there's kind of an interesting story going on right now, especially to kick off the year. January actually crushed for the national level. We saw occupancy rise over 45%. We hadn't seen that over the past 2 years as things wrapped up. So a great start to the year in January occupancy, which is great. Again, this is encompassing all markets. So ski markets, snowbirds, all that good stuff coming in here for January. But as we shift and look at pace for the month right now, for February, which we're about to wrap up on Friday, and heading into March, that occupancy has been pacing a bit more behind. So that's definitely where our focus has been on helping people, making sure they're able to sell available inventory in the short term and keep an eye on sort of the blend of occupancy and other metrics really within sort of the most common booking window for the US. We'll take a look at booking windows in a little bit, but mostly for national level, we're looking at kind of that 30-day window. Will totally vary for your market, and we'll chat more about that once we look at some specific market data. Past that, I think getting into like late spring, summer, and then the rest of the year, it's really good to kind of see where we should be at this point in the year from an occupancy standpoint. There is certainly some occupancy on the books for the summer, but not a ton quite yet. We're still relatively far out of that booking window for the majority of markets, excluding some markets like Hawaii or more coastal drive-to markets, just depending. But we are seeing that trend pretty much in line with what we've seen the past couple of years. Although it'll be interesting to watch sort of that May and June timeframe starting around Memorial Day, knowing how we've seen pace develop for February, March, and April here. So always important to call out having this data for your market, having this data for your portfolio and benchmarking against your market. This is how you stay more proactive with your revenue management strategy rather than reactive and sort of when you don't have enough time to really influence change here. All right, average daily rate. So same type of data here. So for January, for example, we're looking at where things finished, and then everything else moving forward is how things are pacing compared to last year by month. So for that January finish, you can see we actually inched out slightly ahead of 2024 for January, a bit behind 2023. But overall, with how much we saw occupancy increase for January, pretty positive story for the beginning of the year. February and March, again, pretty close to 2024 ADR. February just behind, March ahead a little bit. And then consistently behind 2023, I think is going to be our story, at least for the next couple months. So I think it's important to keep an eye on sort of those year over year comparisons. And it seems like right now, any sort of win in revenue per available night or overall revenue is likely going to come from occupancy. So being able to sell those room nights, that you have available, especially if the market's not selling out, is going to be the key to driving revenue, at least over the next couple months. You can see, again, some early trends for summer. I want to remind everybody for, May, June, July, August, we're not seeing anything above like 10% occupancy. So these ADR numbers are still early. I'm not super concerned about July at this point, but I think for your own properties and portfolio, certainly important to keep an eye on how ADRs are trending at this point in the year. As that relates to your posted price is very, very important in your overall pricing strategy, especially by individual property, individual listing, will be important moving forward too. And I typically finish on RevPAN. This is sort of our efficiency metric for anybody unfamiliar on really how ADR and occupancy, work together to ultimately drive revenue. So we're looking at the revenue that average properties in the US are bringing in per available night. So excluding any owner nights or blocks or anything like that that are sort of out of the property manager or a host control. So again, you can see January was like a great win. That occupancy push helped us a ton in January, beat out 2023 and definitely beat out 2024. And then a lot of the occupancy decreases that we saw for February, March, and April certainly having an impact here on revenue per available night. So in the short term, it's all about selling nights, especially with the days left we have in February and then what's on the books already for March. But this will be a big focus for us over the next couple weeks as we work with property managers to understand where they are with their pricing strategies and where they could be, given how much time we have left in the spring. For summer still, again, nothing too surprising here. You do sort of see that lead from 2023 compared to this year and then last year all the way through July. But again, still pretty early to tell. Just want to keep an eye on those posted prices and what ADRs are actually coming in here. All right, so some booking activity numbers. We take a look here for average length of stay and then average booking lead time, I think are always good to check in on. We haven't seen any major fluctuations at a national level on average length of stay really over the past 2 years. So that's been pretty flat, no major changes. We have seen this shift quite a bit at individual market levels. So again, always good to have this available for your market and understand even month to month how this is changing based on stay dates. We are seeing a consistent theme really over the past 4 years, but definitely over the past 2 years of a decrease in booking lead time. This, I think, has been common knowledge for the past couple of years now, but again, something very, very important to call out if you haven't made any changes to your pricing strategy, especially your discounting strategy over the past couple of years. So what we're recommending now is using more of a dynamic discounting strategy where throughout the year, you're really understanding, okay, now for people who are booking in February, what's my booking window for today for the next couple of weeks? And how does my discounting strategy align with that? Am I discounting too much outside of that window? Am I not discounting enough within that window? Gut checking that with your booking lead time on a daily, weekly, at the very least monthly basis is definitely a best practice to make sure that you're aligning with what guests are searching for and understanding that booking lead times don't stay the same throughout the whole year. They change day by day, certainly season by season. So aligning your strategy there as efficiently as possible will certainly help you save on some ADRs and hopefully boost occupancy. Cool. That's US high level. So let's get into some regional trends. I picked some markets that were telling an interesting story right now and also just some big markets. We certainly have a lot of this data for all markets in the US and then globally as well. This is a lot of what our revenue management and data science team takes a look at on a regular basis to understand how markets are pacing compared to previous years, what we can influence within our algorithm on behalf of all of our users, and ultimately how that shakes out in the end from a performance standpoint. So starting off with a big one, Florida Panhandle occupancy, I thought was looking very, very interesting this year. Right off the bat, we're looking at that same occupancy pace data just day by day now, so a bit more specific. My eyes immediately go to really spring break in the Florida Panhandle and what we saw in 2023 and 2024 and what really isn't shaping up right now in these markets. So you can see some big pace losses here upcoming in the middle of March, end of March, and then early April as well on some of these weeks for spring break. So big call out here. If you're in this market, ensure that you're keeping an eye on this. It's certainly on your radar right now for spring break and kind of coming down to the wire. But really understanding compared to previous years, are you driving higher ADRs that are helping you out on the revenue side? Is it true just really big occupancy loss? Is the breakdown here more so like larger bedrooms, smaller bedrooms? This I think is a big red flag for the market on the occupancy side of things just for spring break. So I wanted to call this out. This again is something that you just want to be aware of, whether that's happening within your own portfolio or the broader market, and then how you can fight against that with your own strategy and against all your competitors as well. A little bit of a brighter note, for that sort of like shift in between and shoulder season between shoulder or summer and spring break here, we are seeing things pretty much trend along what we saw the past couple years, which is good. So some opportunity there for some steady business as we lead into summer. You can get a good idea of occupancy for the market in summer right now at this point. So we do sort of see that early summer, early June timeframe coming right out of Memorial Day, peak up, but we're not even at 20% for like the majority of July and August. So still early for that second half of summer, certainly all the way through Labor Day, but important to keep an eye on some of the pace details right now that 2025 is slowly falling behind 2024 and 2023. So for spring break, you certainly want to keep an eye on some of the last minute rates you have going on here, posted prices out there for what's available. If you're not watching those day by day at a listing detail at this point, you could be losing out on some opportunity. So the occupancy pace data is going to help you on adjusting some of those prices. And then again, want to call out using those dynamic time-based adjustments to really impact your pricing strategy effectively with what we're seeing in the market from a booking lead time perspective. As a summer call out, I would really gut check where your posted prices are for summer 2025 compared to where they were in summer 2024. That might be having an impact on some of this occupancy pace, depending on what you're seeing on the ADR side of things. So that yellow line for June and July, we definitely want to crank up here over the next couple weeks. If that needs to come from a bit of pricing, make sure you build that occupancy base and then push your prices past there. But we're starting to see that window open up a little bit for summer. Cool. On to a completely different market, looking at occupancy pace over in Oahu. So this data is looking a bit more positive for 2025. You can see that yellow line really keeping up and actually beating out both 24 and 23 in quite a few spots over the next couple weeks, next couple months, which is great. Oahu as a market typically has a much longer booking lead time than any other market in the US. So this base has built up really over the past 8 to 10 months, I would say, for the first couple months of 2025. What's great that we're seeing right now is even around that end of April, early May timeframe, we are seeing a big occupancy lead where we typically don't see that at this point in the year. And then summer base is looking great right now. Pretty much every single day from Memorial Day to Labor Day is pacing ahead in occupancy for the market. So great news here. Again, you want to gut check where your listings are for the average property in Oahu right now. I would certainly recommend you are pricing above where you were the past 2 years. Take advantage of this occupancy base. Take advantage of the decrease in supply for the market over these dates, and make sure your pricing reflects that. Even though we're well within that booking window for the market. You can see that trend line stay pretty positive for the end of summer and then even into the rest of the year. But it's still a little too early to tell for like the Thanksgiving, Christmas timeframes on where things are going to shake out. But all positive news on this side of the house for occupancy in Oahu. So lift some of that summer pricing if you can, again, based on this occupancy pace data, and then review some of those far out premiums to take a look at ADR for even summer at this point, but definitely towards the end of the year if you're seeing occupancy trend ahead of where you were in 2024. All right, one last one here. I want to take a look at Bend, and we're looking at RevPAN here. So this is going to be a much more detailed look at, again, the blend of occupancy and ADR. So 2025 is in yellow. I see a lot of great spots here in Bend, especially some of those weekends throughout the summer. Seeing some really, really good revenue per available night strength there. That is coming from quite a bit of occupancy. Taking a look at some of the behind the scenes data here. A lot of big occupancy boosts in summer. Honestly, leading up until the 4th of July is having a nice impact on um, just revenue potential for listings that we didn't see at the same time in 2024 and that we kind of saw in 2023, but even this year is beating it out quite a bit. So make sure you're dialed in on a lot of your pricing here. You really want to make sure that when you're using dynamic pricing, that weekday factor that sort of accounts for a Saturday being more valuable than a Monday, you want to make sure that that's changing seasonally. As you can see here in sort of that shoulder period in spring as we gear up for summer, there is less of a swing in revenue per available night that we see between weekday and weekend. So that factor should change from this time period in spring to this time period in summer, where we are seeing much more value being driven from those weekends. So keep an eye on that. Basically, your day of week factor every single day should change seasonally. So every single day as you move closer to high season or out of high season, that should all be changing in line with some of this data that we're seeing here. But overall for Ben, seeing some really positive numbers, especially for the majority of the year. But keep an eye on some of these detailed spikes and what you can do on some of those specific dates. Cool. So like I said, we've got a lot more of that classic data. I kind of went through the big three: occupancy, ADR, revenue per available night. If you're interested in more, I've got some call outs towards the end of the presentation just to take a look at more. But I wanted to spend a couple minutes talking about search data and search insights. We started collecting search data about 5 years ago now and building out a lot of our methodology for collecting this type of information. You've probably seen some of it before, but I want to go over sort of how we collect this information. So all the data that you're going to see, really for the US level here, we're collecting from direct booking websites. So we're able to see, okay, somebody plugs in stay dates, a location, a property, the number of guests, amenities, things like that, and basically divvy that up by day. So we can start collecting, okay, there's a bunch of people starting to search for July 13th or December 2nd. We read that in real time, and then we're able to basically suss out, which dates or date ranges are in super, super high demand from a search perspective or in low demand. For reference, before having this data, we could really only see this from like market occupancy data. So we had to start seeing the market kind of book up if there was maybe a new event or a change in seasonality. We had to have those sort of sacrificial bookings in the market occur first for us to understand, or for any demand tool to understand what's going on in the market. We can certainly read some history, and we always know 4th of July is going to be big, Christmas is going to be big, Coachella, whatever it might be. But search data lets us get ahead of that. So before anybody books, when like a big concert gets announced or a new festival or a major holiday shifts dates all of a sudden, we can really read that ahead of time with search data. So we collect that from direct booking websites, can figure out those high demand dates. We translate that into an additional pricing factor that allows you to say, okay, there's more people searching, nobody's booked yet, but it looks like there's some higher than usual demand here, and we pepper that into your pricing. We actually also do the inverse as well. So for dates that aren't getting searched at all, we understand that that's certainly a lack of demand and should reflect in your pricing as well as a decrease in pricing. So that's how we collect the data and feed it into pricing. And then also we take a look at basically that same information on like popular amenities, where these people are booking, funnel conversion data on your website to really understand, are there any blockers or red flags for people not booking on your website? If a bunch of people are searching for 4th of July for 4 nights and you have a 5-night min stay, that's probably a big blocker for them to actually book. So we can now map that search data all the way back to your min stay strategy and then recommend that you change that strategy. So that's how we collect that data. We have this available pretty much globally at this point, so we can take a look at quite a few different markets. What I want to call out today is really just what we're seeing for the US to give you an idea of how I take a look at this information. So what we're looking at here is stay dates on the bottom from today through the end of the year. and then what percentage of searches from the past 30 days we've seen for these stay dates. So what you see mapped out here is every single search that's been made over the past 30 days and when people were actually looking to book for. So how that all shakes out right now is about 50% of the searches in the past 30 days were from stay dates from now until Memorial Day. 40% of those searches were for the summer, so Memorial Day to Labor Day. So this certainly sort of backs up and sort of reinforces the idea of where we are in the US right now. There's still a ton of demand for like last minute ski trips, spring break trips, certainly, even just kind of general slower shoulder spring season travel. And then we see also quite a few people, half of the people searching for vacation rentals in the US only looking at summer dates right now. So to really call out where you should be focusing your strategy and what we've been talking about, definitely the short term over the next couple of weeks, and then certainly for summer as well. There's a lot of interest in summer bookings and people searching right now. And we can also take a look at that coupled with some of that occupancy data from before. So this pink line you'll now see, that's US occupancy data that we were looking at, I think on the first slide that I was on. But you can see we're only at, maybe 15% occupancy for the summer, but those searches are representing half of what people are looking for right now. So, pretty much with most years, we're about to see that big boom as we move out of the next couple weeks for all those summer dates. So just to call out, like now is the time. If you're not looking at your summer strategy, if you haven't looked at it, if you looked at it on January 1st and haven't looked at it until now, get in there, take a look at what's going on because there are people searching for stays then on the broader country level. So this is a high level kind of what we look at. We look at this by market again to identify some of those dates. Here's an example, kind of all these spikes, even for like some of the spring break weekends here, and then weekends over the summer, you can see a lot of searches happening, but maybe not as much occupancy. This might be an indicator of, again, pricing being too high, min stays being too aggressive, some other reason why people aren't booking. And is a really good like revenue management red flag indicator for your own portfolio or your market on why people aren't booking. Again, it could be price, but it could be anything. So mapping that is really important to call out, and especially for us at a market level and then country level as well. So I wanted to fold this in. I know we classically always look at those big three, ADR, RevPAN, occupancy for all these markets, but more and more we want to start looking at search data and all this new data we have in the market to really understand what's going on, especially shaping kind of the future and relying less on what we saw 3, 4, 5 years ago to inform what we'll do for the rest of the year. Cool. Couple key takeaways, and then we'll open it up for questions. So again, if you have any questions on sort of that data, what's happening in your market, if you have a question for Matt, feel free to ask Matt a question. I've been talking for a while. But key takeaways I always like to leave everybody with. We mostly talked about pacing data today. So if you don't have access to that, make sure you have it for your own portfolio and against the market. That's going to be your best indicator for how things are performing into the future. And within that average booking window, what you should actually do within your strategy and what changes you should make, and then ultimately how to measure them. Measuring them, you always want to benchmark your own property's performance against the market to show yourself, to show owners, and just add value to your revenue management strategy. For example, I talked to so many property managers over the past couple of years that said, hey, I had this owner and he lost out. He made $5,000 less than he did last year, but the market is down 20% in revenue. If you can still show that owner that you were in, the top 10 percentile of the market for their property or for their bedroom size, they're still going to see the value in your property management program, even though they know that they made less money and the market is down. But you have to be able to easily communicate that data, tell that narrative, tell that story, and do that in a way that isn't as reactive. Because if the owner is the one coming to you first, then you've already kind of lost out on saving them with performance. Educating them about the market, educating them that in the Florida Panhandle, we're seeing occupancy pace decrease year over year at this point in February is a great tidbit to add into an owner newsletter or a conversation with your owner teams to let them know, like, hey, we're seeing this now. We've updated pricing. We're still here for you, but we are seeing this in the market. So you're kind of prepping them ahead of time for ultimately what might happen when we're in the fall and talking about summer 25 performance. And the last one I want to call out, always look for new types of data, new strategies, again, mostly to win out against competitors. I know if any of you are selling on OTAs, they are working on a lot of new promotional strategies to help here, ways for you to increase visibility on their platforms, even ways you can do that on your direct booking website. Merchandising is a big thing. I encourage everybody here, if no matter where you sell your properties, if it's on an OTA like Airbnb or VRBO, or if it's on your direct booking website, take the time to try to start on Google and find your properties and go through the process of booking them. And you'll probably come across something, whether it's a piece of content, pricing, min stays, some piece of technology that is maybe blocking a guest from getting to one of your properties or efficiently booking one of them. Start there as sort of like an audit. We always think in our mindset of like pricing and revenue management every single day. Go through the motions of trying to book like a guest, and you're bound to find something that you could actually change or experiment with that could actually help um, with getting your properties booked. Um, Cool. So I want to comment a little bit too on just sort of like general trends we're seeing for 2025. I know when heading into conferences or events or anything like that, we are seeing, sort of booking activity down compared to previous years. I think we're seeing that a lot now over the next couple weeks. Really what I called out in sort of like the US national data. Again, January was great, but kind of a one-off. And really what we're seeing pace-wise for February, March, and April is certainly a change from what we've seen even coming out of late last year. So to me, I think the most effective exercises that we've done with property managers over the past couple of weeks is understanding what type of pricing strategy you had out in the world at this same time in 2024, 2023, and exporting that data, seeing where you are now, and then being able to figure out, is it high prices? Is it truly a lack of demand for your market? Are you losing out to competitors? And kind of analyzing what's happening there. I think at a high level for the US, we have really in general been increasing prices over the past 5, 6 years. I know there's been some backtracking a little bit depending on seasons or specific listings or markets, but in general, if you look at a property that you've had for a couple of years, go back and see what you were trying to sell it for 2, 3 years ago and what you're selling it for this spring or this summer. And that might clue you into some room where you can back off a little bit, or at least try to build some of that occupancy base ahead of time with some lower rates potentially before trying to increase some of those prices and drive for ADR. But it's certainly something that we're keeping an eye on. We're working through a couple initiatives at Beyond to really help people identify that. We've also seen minimums come up quite a bit. So owner minimums or just general property minimums really impacting the ability to, again, go for some of that occupancy on lower demand dates or lower demand periods in general. So I think a min audit is always a great practice at this time of year. You should experiment with seasonal mins. If you've got owner dictated mins, figure out how to have those conversations with owners and really work through, how you can lower those. But now's the time, I think, to do that kind of audit and understand how min prices are affecting your ability to ultimately go for occupancy, which as a revenue manager, like 100% occupancy is the goal. Um, not necessarily as an operator or anything like that, but as a revenue manager, I can't put up last night on the shelf again and sell it. It's gone. So I want to hit 100% occupancy all the time, and that's not going to come from really high restrictive mins. So wanted to comment on that. It's a couple different things, but always happy to chat through kind of what's happening in your market, or what you're seeing, and how revenue management can help. I want to call out Beyond will be at the VR Nation conference coming up in Austin. We're super excited. About 2 months out now, which is exciting. You can use our code here for 10% off, but we'll certainly be sharing more about really what happened in the spring, ultimately what we saw. And that time frame at the end of April is going to be a really, really great time to be talking about summer, what we're seeing, how we're in the prime booking window, what trends are working, what's not. So we're really excited to meet everybody there and hope you all can join us. I'll pause here. I've got 2 things up. If you want more of that data, we have a free calculator here where you can plug in any property, any link, and we'll basically walk through sort of like any recommendations for that property and kind of show you a little bit of what revenue management can do for your property. And then we also have some more of that market data available. As a little tease right now, our teams are working on a lot on the data side right now. So likely within the next month, if you're subscribed to our product newsletter, we are releasing some exciting data-focused products, not necessarily related to dynamic pricing. So be on the lookout for more of that, but more of the data that I just shared. We're really wanting to get that out into the world. So looking for all types of beta testers if you're an existing Beyond customer, and for everybody else, we'll share more shortly. But I'll pause there. Happy to take any questions through chat if you have anything on your mind, or Matt, if you have anything else to add.
Thanks, Ryan. This is great. I've learned so much today. It's fantastic. Yeah, I think for me, like, how do you handle if you have an owner that wants a higher min than what the market is demanding? How do you have that conversation with that person using this data?
Yeah, good call out. I think that's one of the more common things that even we talked about way back in the day. And I think really I start with the property deep dive and figuring out what kind of flexibility we have. If I know that it's feasible to convince this owner to take down their annual minimum, we'll start there and say, okay, here's sort of a summary of what similar listings are doing. So either building a direct comp set and showing them some of that data with how their competitors are being priced, what they're actually being booked for, or if it's just a market summary of 2 or 3 bedrooms, depending on what the owner of property is looking like. That's where I start. And especially with owner conversations, I'm looking for the data that tells the story that I want. If I'm looking at comp sets and they all have, higher prices or something, maybe I'm going to that market average and saying, okay, market average prices are on average throughout the year $20 below your annual minimum. Like we're not even showing up in some of these searches where these properties are getting booked, and you can pull in occupancy data. And so once you bring that to the owner, I think it's really important to gauge, again, their willingness to kind of try things out with you. So what I've seen work well in the past is say, hey, for the next 6 weeks, do you mind, like it's super low season, or maybe it's high season, whatever it might be, get their permission to test out just a date range with the new men. And use that time to get as many bookings as you can in there, boost occupancy, and then ultimately boost revenue if you know that's what the owner wants. But have them give you like a time frame just to test it out before moving and talking about like an annual min or even like a high season min or anything like that. Give them, ask them for a little bit of wiggle room, and then prove to them that you can make them more money with those lower minimums. I find that that helps a lot too. And also visually and beyond, you can pull sort of their 365 like squiggly line dynamic pricing chart and fold in different types of mins. So you can show them visually of the next 365 days how many days are hitting their min and how many days they might just be overpriced from the rest of the market. You can fold in market average pricing in there as well. And sometimes the visual helps them understand, oh, wow, I know my property is maybe not like the Ritz-Carlton of 3 bedrooms in this market. I should be more closer to the average and I should bring down that min a little bit. But really showing them how restrictive it can be visually can also be a big help in my opinion.
Yeah, that's super smart. I know when we have our calls with, when we're onboarding properties, these OTAs, it's a lot about them showing up just in the search that really helps them. And if their min's too high, as a lot of us know here on this call, then it's really impacting them long term.
Oh yeah. Yeah, and we always get asked, "Hey, what is Airbnb doing with the algorithm?" And it's a black box. Like we don't know what ultimately gets you that number one placement. But that kind of goes back to searching for your own properties and trying to find your own properties in this vast digital landscape can really show you, where things are selling, where you're doing well, where you're not coming up at all. Because we could talk about pricing and minimums all day long, but if you're not even getting eyeballs on your properties, then you're just spinning your wheels, really trying to get somebody to book. So definitely important to kind of do that audit and make sure you've got, the ability to find some of those errors or room for improvement.
Great. We had someone comment about all the snow they got in on the Florida Panhandle. The weather
Yeah,
has been crazy this
yeah,
winter. Yeah,
yeah. Our newest ski market um,
yeah.
in the Florida Panhandle.
Cross
But
country
yeah, it's
ski.
been crazy. Weather has such a big impact. I mean, Just a call out, like I know we're talking to VR Nation here, and these people are really plugged into revenue management and have been talking about it. But if you don't have a regular revenue management meeting every single week, if you're not all talking about how to get more eyeballs on your bookings and eyeballs on your listings, then you're missing out. So always a shout out for building revenue management into a cornerstone. It's much more than just dynamic pricing. It's owner management, it's marketing, it's distribution, it's market analysis. I mean, there's so much that goes into it. So harness it now because over the next couple of years, it's just going to continue to grow.
100%, Ryan. When we worked together back in the day, it was the single biggest change I made in my business back then. And it's
Yeah.
years later now, we're still, of course, doing it, and it's morphing and it's becoming more important. So what Ryan is saying is so true. And thanks for today. You did a great job.
Of course. Thanks for having me. This was super fun. So yeah, we'll share the slide deck out with everybody just so you have this info. My email is just Ryan at Beyond Pricing. If you have any questions or want to reach out, always available for anybody here. And like I said, we're really excited for April, as well as the VR Nation Roadshow. So we'll see some of you all there, and looking forward to more webinars in the future.
Thanks, Ryan.
Cool. Thanks everyone. Have a good rest of the day. Bye y'all.